Hello, everyone. Let's give a couple more minutes for everyone to join in. Welcome, everyone. Thank you for joining us today for another webinar on how to navigate through this COVID relief lending. I'm going to allow a couple more minutes for everyone to join in, and thank you so much, everyone, for joining us today. I see many familiar names. Nice to see you all. I see Rishikesh Naik. Nice to see you. Hello, Piyush uncle. Hey, Patty, how are you? Good to see you all. How is your day going so far? Are you enjoying this sunny day? On the East Coast side, we have a beautiful sun outside today. Okay, let's give a couple more minutes while we are waiting on a couple more minutes. If someone wants to post in how is their day going so far, it will be good to see. I feel like I'm talking to someone live person here. It's kind of really awkward staying with this webinar. Staying in the lockdown with the COVID, not being able to see you all. So it's kind of not fun on my side. I only see myself. Okay, and we have some people joining us on the Facebook Live as well. So some people are joining in. Hello, Pratik. Hello, Amit. Hi, Ed. Good to see you. Hey, Courtney. Yeah, applying for PPP to about an hour after this call. Okay, hoping to be aggressive with the amount I asked for. Absolutely. No, absolutely. We need to get the maximum amount that you are eligible for, right? It's very important that it is calculated correctly. Hello, Sam. All right, so without further delay, let's get started with our webinar. So as usual, I'm going to allow some time and to go over all the questions as well. So, and as promised, we will make sure that we address all the live question and answer, for this webinar. So let's keep diving in further. As many of you know, we are KB Tax Advisor CPAs, and we are based out of Central Valley, Pennsylvania. However, we serve clients throughout the USA. And a little bit of disclaimer that the materials in this presentation has been prepared by and is a property of KB Tax Advisor CPAs. All content, including images and impressions, are protected under the US intellectual property and trademark laws. Any reproduction or dissemination of any element of this presentation without prior written consent from us is expressly prohibited. The most important, before taking any action based on this information, we strongly encourage that you consult with your professional accounting advisor about your specific unique situation. I am a CPA, but I'm not your CPA unless you have signed a written engagement agreement with us, with my practice that we have also accepted at the same time and signed it. And you have paid our practice to serve these services. So even if I'm a CPA, you cannot take someone's guideline, someone's advice without knowing your unique situation. It's pretty much like prescribing a medicine to someone without even checking them. And well, the things keep changing, as we all know. So try to stay up to date. All the material in this presentation is effective as of January 20, 2021. Congress, IRS, SBA, US Treasury, etc. changed the rules and regulations. So we have to make sure that we remain up to date with that. And this webinar is based on what was known as of yesterday. Okay, so if you have any questions, it will be best if you post the questions in the Q&A box, which is towards the bottom of your meeting window, depending on if you are joining in from your computer, laptop, or your smartphone or tablet. Post the questions in Q&A. I will give the first preference to answering questions which are in Q&A. I would really appreciate if there is any feedback that you want to give us, post that in the chat box. All righty, a little bit about our firm. We are industry-leading advisory firm founded by two sisters based out of Central Valley. And we provide one-stop shop solution for all tax and accounting needs of our clients, and provide with the customized, innovative tax strategies to help our client live fruitful lives, achieve their ultimate financial freedom, and live lasting legacy for their family. Moving on, I'm going to skip some of the slides. This is a new slide that I wanted to come here. With the CARES Act, we have helped many, many business owners, more than 200 business owners. And this is the updated numbers. Last 2 weeks ago, I think when we met, we had about $21 million in EIDL that we had helped. We are still helping people from the first round of CARES Act, as well as the second round of CARES Act. So together, my firm has helped business owners get more than $25 million with the EIDL loans, about $1.7 million or close to $1.8 million with the PPP loans. Out of that, $753,000 has already been forgiven. Rest are still pending, and we have been holding it off intentionally, some of them. And as far as grants are concerned, state and county grants, we have helped many business owners get more than $182,000 in the grants as well. So we are very familiar with the rules and requirements, and we have done our thorough due diligence on that. Now, how to financially survive COVID-19 with the relief loans, taking advantage of new legislation and forecasting in this new economy. Well, as a result of the COVID, we have seen 4 bills which has come out so far: FFCRA, CARES Act with $2.2 trillion bill, interim emergency bill of $484 billion, and coronavirus relief and omnibus agreement with about $900 billion. And as we all know, that Biden's new COVID bill has already come out, which is almost $1.9 trillion. And there are 6th and 7th bill already ready in a draft format. So we are not yet done. So it's very, very important we understand each of these bills in a right way and have the prioritized plan of COVID relief lending. And why I'm saying prioritized plan of COVID relief lending, because some of these bills are drafted in a way that if you have got one thing, one type of funding, you are automatically ineligible for the second one. And if you have got the second one, you are automatically ineligible for the third one. So it's very important that it is done correctly. These are not the things to mess around yourself. And many of you know who tried to mess it around in the first round, taking a chance, money ran out and they didn't get anything. So it's very, very important that you review all the application numbers and everything correct. What we are going to cover here, PPP overview, Paycheck Protection Program of the first-time borrowers, second-time borrowers, EIDL loans, economic injury disaster loans, employee retention credits, other credits, deductions, and other provisions available, employer payroll tax deferment, COVID cash flow management, Biden's tax planning, a little bit overview, and additional relief options available. Now, here's the thing. Many people get still confused with the PPP program or PPP loan. I do remember one of my team members, Justin, was talking to someone 2 days ago, and that person was like, my business is really suffering. but I don't know how to survive, what to do. People are raving about the PPP loan and a whole bunch of different loans. I just don't get it, why people are getting crazy. It's still a loan. So there are so many business owners who still don't know. Yes, this is a loan in a way, but if it is used correctly, it's forgiven. You are not paying any taxes on this forgiven expenses, plus it's not taxable. So it's kind of a win-win situation. And it's very, very important that we spread this word as much as possible with as many business owners as possible. And that's something we have been trying to achieve with these webinars, that we educate people what is available. If you don't know what is available, you can't really take any advantage of that. So that's what our goal is. Now with this new stimulus bill, there is a provision there where we are, Congress is issuing recovery rebates of about $600 per taxpayer. Well, not Congress, IRS, forgive me on that. So IRS is issuing $600 per taxpayer of stimulus checks, which we call it as a recovery rebates as well. It's $1,200 per married couple, $600 per qualifying child of 17 years or younger at the end of 2020. And the phase out begins at $75,000 of modified AGI at the single level, or if it is a head of household, $112,000. And if it is married filing jointly, it's $150,000. Now, phase out rate is at 5% over beginning of the phase out limit. What it really means, if you are a married filing joint person and your income comes out to be $160,000, you are not missing out on the whole credit. Just a portion of the credit is going to get missed out. The advance payments based upon the 2019 tax return information is determined, including non-filers who entered into the IRS portal. They are going to be eligible. No requirement to repay this money if your income in 2020 is higher. So what it means, when the first round of rebates came in as part of the Stimulus Act, that time your income was lower, because those stimulus rebates were given based on the 2019 tax return. So in 2019, your income was within this threshold amount and you got this money stimulus rebate. But 2020, for some reason, your income went higher. You still don't have to pay back. It's yours to keep. Now, if you're someone who did not receive any stimulus payment in the first round, then you are eligible to get this credit when you file your 2020 tax return, okay? Make sure you tell your accountant that you have not received this stimulus payment, and there is a special section in 1040 of 2020 tax return. IRS has changed the 1040 form to include the question related to the stimulus payment. So make sure you report and answer those questions so that you receive this payment. Now for 2020 tax year, you will receive it based on the 2019 income. Again, it's the same thing. If you do not receive the second round of stimulus payment, you can report it on your tax return and get it accordingly. Now you must have an SSN number to receive this stimulus payment. If amount of credit is higher on 2020 return, you are still eligible to only $1,200. And for example, if 2019 income is too high, no advance payment was received. But if 2020 income drops and it is within the phase out limit, you can claim that credit in 1040 tax return. Now there's a difference between the deduction and credit. The credit is something you get dollar for dollar back, okay? The deduction is something reduces your taxable income, but the credit is something you get dollar for dollar back. Okay, so child tax credit or the stimulus credit. If it is a $1,200 credit, your tax liability gets reduced by $1,200 or you get $1,200 of refund. There is a way by going on the IRS website, you can check the status of your recovery rebates. And if you need any help on that, my team can send you the link. I didn't have it ready ahead of time, but just post it in the chat box and one of my team members will just send you the link where you can check your recovery rebate status. The tax avoidance I just wanted to get this clear because some people, they think, okay, this sounds kind of fishy, but no, okay, whatever we talk is all based on the legal IRS tax laws of the country. The tax avoidance is using the tax law to reduce your taxes. And we call it as avoiding the taxes or eliminating the taxes completely, which is legal. Now, tax evasion, which means avoiding the tax laws to reduce your taxes, which is evading the taxes, is illegal. Okay? The tax loophole, this is something I get asked by so many people. Is there something like legal loopholes? Absolutely, there is legal loopholes. There are legal loopholes using the tax laws to reduce your taxes, which oftentimes most people are not even aware, including the accountants. There are many accountants who are not even aware about the tax loopholes. And the tax fraud, which is ignoring the tax laws to reduce your taxes illegally, okay? So I just wanted to get this, some of the definition here. So if you hear from me loophole, it really means a loophole. And it's based on the thorough research of the IRS tax codes. The difference between the PPP1, which is, PPP1 forgiveness, what was a prior law and what is the new stimulus law that was signed in on December 27, what is included in there and how is your EIDL grant is going to be factored in if you receive that EIDL grant of $10,000. So PPP forgiveness is not an income. That's what was declared under the prior law, and that's what was the intention of the Congress when the law was passed, which is a different thing that the IRS came in and said, oh, wait a minute, we are going to charge taxes on this income. But the good thing is they all came into agreement, and finally PPP loan, which is forgiven 100% by your bank, is not your taxable income. At the same time, it will not reduce your tax deductions, okay? So it's kind of, it has pretty much no effect on your taxes. However, if you are a partner in a partnership or a shareholder, S corporation shareholder, it could impact your basis in the business. And especially if you're someone whose business have a big losses or have any amount of losses in last few years, and 2020 is also a lost year, it could definitely impact your basis in your tax return. So that's something to keep in mind. You have to on that side. Now, employers cannot deduct the amount of the PPP forgiven, amount of PPP loan that is forgiven under the prior law. Under the new stimulus, it's employers are now allowed to deduct the amount of the PPP loan that is forgiven. And it does not get reduced by your EIDL grant. Now, if when you applied for the PPP forgiveness and when it was forgiven and you were required to pay back that EIDL grant money, hold on to it. You will hear back from your bank as well as from the SBA on how they are going to pay you that EIDL grant money, which you already paid back. So that that will come back to you eventually. How it is going to happen, we are still waiting on the guidance from the SBA, but we know for sure SBA will communicate with your bank and your banker will communicate with you. We don't have the timeline on that, but it's going to be available. And then the another one, a new thing here is IRS released Revenue Ruling 2021-02 on January 6th, confirming that it's going to follow this new law, and prior IRS notices, which is IRS Revenue Ruling or IRS Revenue Procedure Code, are canceled and are otherwise obsolete. So the IRS had, in response to this, had issued multiple regulations which are now no longer applicable, and the new ruling 2021-02 is effective. Now, with the PPP1, you can still reapply. If you had never applied before, this is your last chance to get the PPP1 loan. At the same time, you can also apply for the PPP2 loan. Now, if you had applied for the PPP1 loan and for one or the other reason, you received lesser money than what you were actually eligible for, you are allowed to amend your PPP-1 loan application to request higher money. So whatever that you were eligible for. And I can't believe I see at least 2 to 3 applications on a daily basis where, client made a mistake in applying for the first PPP themselves, or their prior accountant made a mistake, or their banker made a mistake. They were eligible for a higher amount. For one or the other reason, they received $15,000, $20,000, $27,000 less money than what they were actually eligible. So that's a huge money to receive less. The first round of PPP loan was based on your average payroll times 2.5 times for all the industries, didn't matter what industry you are in. With this new bill, most industries are eligible again for 2.5 times, whereas hoteliers, restaurant industries, anyone in the accommodation industry, they are eligible for 3.5 times their payroll, monthly average payroll amount. So that's kind of a huge difference, and it really bumps up, what you are receiving in this PPP loan. The recovery period still remains the same, 8 or 24 weeks with both of them. The 60% of the total PPP loan amount is still intended for the payroll, the same thing with both the sides. But with this one, this new bill now allows for the group life, group disability insurance, group dental, as well as group vision benefits paid by the employers as well. The loan terms are exact same, 1% interest, not compounded. Here it was 2 or 5 years based on the, when you applied for the loan. Here the amount is a little bit different, 5 years on repayment of the non-forgiveness. Covered uses, again, payroll cost, rent, utilities, interest, which is what was allowed initially. But now that retrospectively you are allowed to use as a covered uses, payroll cost, your rent, utilities, interest, operations expenditure, certain property damages, if you had any property damages, certain supplier cost, as well as certain worker protection expenses as well. If you had to spend more money in getting, gloves, extra cleaning supplies, masks, sanitizers, and stuff like that for your employees, or to keep your facility clean, those all are covered now with the PPP loan. Now, the tricky part here is to be eligible to receive the second round of PPP loan, you have to have quarter over quarter, at least 25% drop in revenue. If there is not a 25% drop in revenue, quarter over quarter comparison, you're not eligible for this PPP loan. So you have to have either 2019 versus 2020 overall minimum 25% drop in revenue, or quarter over quarter 25% drop in revenue, one or the other, in order to be eligible for the second round of PPP loan. And when it comes to the first PPP loan forgiveness application, if you can, I would absolutely recommend go with the 60-40% of forgiveness. Don't go 100% payroll. It's easier for the banks. I've seen many banks requesting to go with 100% payroll because they don't have to do too much of documentation and stuff like that. Go with the 60-40 if you're eligible, and especially if your business was required to be shut down because of the government order, you absolutely should go with the 60-40 to maximize your employee retention tax credit. I'm going to cover that in next few slides. So I think I covered this one before. Sorry, it's a repetition here. So PPP funding second draw. The new bill, which was signed on December 27th, that bill was $900 billion bill, out of which only $284 billion of funds were allowed towards the PPP expenses. Now, out of that out of that $284 billion, $35 billion is only for the first PPP draw. For the businesses who never received any PPP loan, or they received a smaller amount of PPP loan than what they were eligible for, and things like that. And look here, $25 billion is what has been allocated to the second draw. So if we look at both, This is about $10 billion less than the first draw, which means there are so many businesses who did not made it to here, or they got substantially less amount. And that's the reason, they are allowing you to amend your first round of PPP loan. And second draw, there are only $25 billion. And the analogy behind $25 billion is they want only the businesses who has 25% drop in revenue. They only qualify for this loan. So that's the reason. And it's very important that, you have 10 or fewer employees and loans are less than $250,000 in low income area. Now, rest of the $284 billion is allocated towards the microloans, PPP auditing and fraud mitigation processes, as well as additional provisions included in the law, which also includes the agent fees to the bank and stuff like that. Whether or not bank pays the agent fees to the accountant like us, not a big deal, but banks are keeping it. I have yet to find a bank which paid agent commission fees. We never received it, helping out more than 200 business owners. But there are very handful of banks which are giving out the fees. PPP first and second draw, the final takeaways: act fast, because this money is available first come, first serve basis. I know this is something I have been saying in my so many emails, so much of post, in my other videos, other webinars, but cannot emphasize it enough. There are more than 300,000 of applications that has already been submitted on the PPP loans. And, SBA funded about $60,000 worth of PPP loan last week. Since this week, they must have absolutely funded more. We do have some clients for whom we applied for the PPP loan and their application has been approved already. I don't have anyone who has received the money yet. SBA is a little bit slow this time compared to the first round, but I think SBA knows what they are doing this time around. So I think they are going more systematically, and they are kind of coming up with the proper guidance and everything. But it is expected and speculated that this money is going to run out within next 1 to 2 weeks. Both of them, the PPP first round as well as the second round, are going to be exhausted within next 1 to 2 weeks. The incoming PPP loans are again tax-free, and the expenses paid with the PPP loan monies that are forgiven are tax deductible as well. It allows borrowers who returned all or part of their PPP loan to reapply for the maximum amount again. So, it's all pretty much I covered before. What if you purchased a new business in 2019 or 2020 or 2021? This is a question I get asked often. And let me launch a poll question while I'm responding to this question. So if you don't mind, have you applied for PPP too, and did you got it approved it? Just select, whatever your situation is. It would be helpful on the survey side. Now, if you are a business owner who purchased a new business in 2019, 2020, or 2021, you are absolutely eligible to get the PPP loan, EIDL loan, just like any other business owner would get it. Okay, so you're absolutely eligible. Now, if it is something a new business constructed and it was not in operation in 2020, or your entity was not in operation before February 15, 2020, then you are not eligible for all the benefits, but you're eligible for some of them. So it's very, very important. I see like many businesses who bought the new business, but because they did not have proper guidance, they did not receive or they did not apply for any of these loans before. And you are absolutely eligible. We have helped many, many clients and many other business owners, have to get qualified for this kind of funding. And it is exactly speculated in the CARES Act and in the new stimulus bill. And based on that, we are doing it. So thank you for taking a moment on taking a poll. So we don't have a single person who has been approved for the PPP loan. And I see about 4 people have applied 3 of which are waiting for the approval, and almost 63% people have not yet applied. And I see 5% people have applied but have been declined or received limited funds. Sorry to hear about that. Reach out to us and we might be able to help you out. Why was it declined? I would be more than, I'm very curious why it got declined. Is there any loophole which will help you get qualified for those loans? Well, we don't know how long this crisis will last, and that's a big part of what it makes it so difficult. The uncertainty of not knowing when it will end, and that's the reason why I say get whatever funding you can get right now, because cash is king, right? We don't know what's coming in next few months. I know vaccines have come out. Many people think that because the vaccines have come out, things will start getting better. And if that was the case, government will not infuse this much of cash in the economy and rather give 3.5 times of the payroll amount as a PPP loan, because they speculated something, they saw something is coming in. And on top of it, Biden introduced another $1.9 trillion bill, which is as big as the CARES Act bill. So there is more coming in. It's not yet over. The truth is the disasters have come year after year, and most people just sit on the sidelines and let the world happen to them. But right now, we are helping anyone affected by COVID-19 navigate through this confusing time. And what we need to do is we need to make sure we submit flawless loan applications, take advantage of all the tax credits, deferrals, and other incentives that are available to you, and manage cash flow to get through this crisis. Now, the important thing is, because this money is available, I would not spend any money from this loan just for whatever reason you feel like it. Use it conservatively, because we don't know how long this is going to last, right? The 5 ways to increase your initial PPP loan is check with the accuracy and potentially amend your initial application if needed. If you are a seasonal employer, there is a special guideline for you. The seasonal employers are someone, like say, for example, if you are someone who has particularly busier months, certain time of the year versus the other, like an ice cream shop, they have a busier month. Summer is their busiest time of the year. Winter, I see many ice cream shops are completely closed or their revenue is very low compared to the summer months. You are considered as a seasonal employer. Or a hotelier, summer months are kind of your busy peak period, and then the winter time, you're a little bit low. So those are the people, and you are eligible for the higher PPP loan amount. Partnership rule update. If you are operating as a partnership, your LLC is structured as a partnership. And if you have the general partner, you are eligible for the higher PPP loan for the partner's share of income as well. So make sure that you got it in the first round. And if you did not get it in the first round already, get it now. Amend your initial application to include expenses for the group insurance, costs like life, dental, vision, and disability insurance, which were already included in the new act. And confirm with your bank if they are participating in the second draw of the PPP loan or not. It's kind of very important that, you stay up to date with these regulations. How our firm helped one of our clients, Sunwise Solutions, get approved for $195,000 of PPP loan within 2 hours. This was around the CARES Act. And any case study that you see, full disclaimer, those are our current client, and we have the written permission from them to share their case study. Without that, I do not share anything. Now, Mr. Reddy, he did not do proper planning, and without guidance from his current accountant, waited until very last moment. And by that time, almost all banks had stopped accepting applications. He reached out to us towards the end of August, especially when there was last day, and many banks had stopped accepting the PPP applications as well. He did not know where to start. We helped him prioritize his plan for COVID relief lending and grant options that were available at that point. Within minutes of consultation, we helped Mr. Reddy felt like a big burden was lifted off his shoulders. We helped him put together proper documentation, got him approved for $195,000 of PPP loan in less than 2 hours, and received the EIDL loan approval within 24 hours. We have done so many applications that, our team is completely aware of all the rules and regulations and everything. You can do all of this yourself as long as you are aware of all the rules and you know how to calculate the maximum amount, because this is the money which you don't have to pay back. EIDL loan and EIDL advances. So what are the changes that are coming in with the EIDL and what to expect? So there is a separate EIDL advance available for the low income communities of $10,000, which is noted as a grant, and covered period of EIDL advance is now 31st December 2021. PPP borrowers who were forced to deduct their EIDL advance will now be repealed and you will receive that money back. And SBA will be required to provide additional guidance on this rollout. The tax treatment will remain the same as PPP loan forgiveness funds. Now, if you had, when you applied for the EIDL loan, you received EIDL grant money or EIDL advance of less than $10,000, you are eligible to receive the rest of the money to make it full $10,000 as a grant. SBA is going to send you an email. They will send you some communication via email. What are the documents that is required to be submitted? You have to stay on top of this email. And if you miss out these emails, you pretty much lost your chance to this free money. So make sure you keep a track of it. Whatever SBA is asking for, you have to submit it as soon as possible. If you delay it for too long, you will miss out on these benefits. So there is a $10,000 grant available for low-income communities as well as businesses who received less than $10,000 in the first round. So it's two components. And there is a new EIDL program. Yes, you heard it right. There is a separate EIDL program which gives out loan beyond $150,000 of EIDL that you have already got earlier. So there are two EIDL programs. One, as part of the CARES Act, where business owners were given up to $150,000 of EIDL loan. And then there is a new one, and the criteria for that are such that you have to have less than 25 employees. You have suffered an economic loss of not less than 30%, which means loss of revenue by 30% quarter-over-quarter comparison, same as PPP loan. Does not include an agricultural enterprise. And the loan amount that you are allowed in this round is the working capital for 180-day period or 6 months of working capital or $50,000, whichever is higher. So in the worst case scenario, if your working capital comes out to be $40,000, you will still receive $50,000. So it's either or, either highest of the working capital or $50,000. The loan terms are exactly same, 3.75% interest rate with 30 years of loan term. No payment required for the first 12 months, no prepayment penalty. So that is something available as well. Now you can apply for up to $2 million of disaster loan as well. EIDL loans have always existed. People just were not very aware about it. But you can also, if your business has suffered a really huge loss because of the pandemic, you can request for the increase in your first EIDL loan, which was $150,000. Plus, you can also get this new EIDL loan beyond that, which is 6 months of working capital of $50,000, whichever is higher. And you can use these funds for all business operations except growth. You do not have to pay this loan back. You can get both the loans. However, the disaster loan must be used for things other than payroll, rent, utilities, and mortgage interest that is being used on the PPP loan. From this, I recall right before this webinar, I met one of the hotelier in Virginia, And I feel kind of really sad for him that his accountant advised, if you have got the PPP loan, you cannot apply for the EIDL loan. He spent more than 6 months in stress, losing his sleep over it, that his business is suffering, he does not have enough money, PPP loan is all exhausted, employees are going away and everything, just because of that, not having that proper guidance from the accountant. So I feel really bad, but this is something available. You can do PPP and EIDL both at the same time. Just keep in mind, if you're using PPP loan, say for example, payroll for June, July, August, use EIDL for the payroll cost if you need to for September, October, November. That's it. Just don't use it for the same period. That's the only thing you have to keep in mind. What's required for these loans? A lot of documents. It's very, very important that you submit the proper documentation establishing the loss in revenue, plus the business operation documents and a whole bunch of things. Spend enough of time in getting all of the documents that are required to be submitted. And if you don't have a couple documents or stuff like that, even though you have submitted to the bank, you are nowhere in the pipeline with the bank. So make sure that you apply majority of the document as it is required by the bank. I do see your message, Courtney, that disaster loan would be perfect to get my head above water. I'm so sorry to hear that you were also told that you could not have both PPP and disaster loan. You are absolutely eligible for both. There has been, it's not the fault of the other accountant, and I don't call the other accountant as negligent either. Everyone is trying their best, okay? Things have been changing so drastically day and night. And many of them, the accountants, they also have their business and they kind of working with the tax due dates and stuff like that, kind of shifting with this remote environment and a whole bunch of things. They might not have been able to keep up to date with the regulations. There was a lot going on. And the accountants, just like you and me, are human beings as well. So I do have the high respect for the other accountants as well. It's just that they were not up to date, and things like this happen. If certain actions are not taken within the certain time frame, you lose out on a lot of things. So it's very important to stay up to date. So this is one of our clients, and this words really touched us, our hearts. And I would like to, bring it up to everyone here. This is the wording which he said, "Your family mission saved my family during this pandemic." And this is very powerful. When we started this webinar just to help out businesses in the community, we did not know where we were headed. The only vision we had, we just want to help out, just provide that platform for business owners, where someone can answer their questions. Being strategic tax and business coach, I knew that when this pandemic hit, business owners are the one who will get crushed by this, because this economy runs on the business owners, small business owners. So he reached out to us on July 15th, asking for help to remove hold on his EIDL. His EIDL was not moving. It was on hold. And we actually applied for the EIDL within the 24 hours when that EIDL, started accepting SBA started accepting the applications. Initially, he was approved for $500,000, but due to that hold, he was even willing to settle for $150,000, which is what the SBA came back and they changed their rules. And he's like, you know what, even if I get $150,000, it's still helpful. Just do something. And we sorted out everything, prepared the whole reconsideration package with all the necessary supporting documents for the SBA to reconsider. Within 18 days of we taking matters in our hands, he got approved for $500,000 in EIDL loan and finally received money in his account. He was so happy and excited. He's like, your family mission helped me save my business. Well, EIDL and PPP loan, both of that comes with some restriction on the proper use of funds. SB can come back anytime in next 4 to 6 years and do an audit on how you use this money. So it's very, very important that you do not use these proceeds of the loan to pay other debt or refinance your loans or marketing, of your business or purchase of capital or fixed assets. So it's very important to keep that guideline in mind. Employee retention tax credit. This credit is considered a refundable payroll tax credit that was only available to the taxpayer who either had their businesses fully or partially suspended during at least one quarter in 2020, or had a drop in gross receipts for quarters in 2020 as compared to the same quarter in 2019. So if you are a business owner whose business was shut down because of the government orders, okay, because of the government orders, you are eligible to receive payroll tax credit for that particular period. Now, the way it works, remember, it's a credit word, which means credit is dollar for dollar reduction in taxes. So, and this is done by amending your 941 forms for 2020. There are 3 different types of employee retention tax credits which are available. And those are section 206, 207, and 302. But 206 is only available for 2020 tax year, where your business was required to be fully or partially suspended. And those could be, if you are one of the non-essential business and your business was shut down, even though you were operating remotely, but it did take some time on your side to, shift everything from in office to go remote. And if you are someone like, say, for example, an insurance agency, okay, many insurance agencies, they they do business based on the foot traffic, okay? And if because of the government order, your business is shut down, and because of that, you don't have any foot traffic, even though you were operating online up to limited capacity for one or the other reason, your business revenue is impacted by that. You are eligible for the employee retention tax credit. So the way these credits work, that it is quite possible that one business would be eligible for tax credit based on section 206 or 207 or 302. You could be eligible for any one of these credits or all 3 of them. The way it works for 2020, you get $5,000 per employee for the whole year. So if you have 5 employees, $5,000 of credit, up to $5,000 of credit, it's about $25,000 in credit. For section 207 and 302 is credit of up to $7,000 per employee per quarter, which means 2021, there are 2 quarters which are eligible for the employee retention tax credit, which is $7,000 per employee per quarter. Now, if you have a drop in revenue of about 50%, let me just make sure. I think I went a little bit. I apologize, guys. Okay. So if you have the drop in, if your business was not shut down because of any government order, but there was a drop in revenue by 50% or more, you're eligible for $5,000 of credit for 2020. And you can take the PPP loan as well as get the employee retention tax credit, and it will not impact your, your eligibility for the PPP loan. So that's kind of a really good thing. The notable characteristics are it provides a payroll tax credit for the qualified wages paid to the employees, and it can now be applied retroactively by first draw of the PPP recipients as well. Can be applied for going forward by second draw PPP recipients as well. And it has been increased from 50% to 70% starting 2021. And it cannot take into account wages paid with the PPP funds. The same thing with a paid sick and family leave credit. If you had an employee who was home to take care of the dependent child or who contracted COVID, and that's why was quarantined, or came in contact with someone who had COVID and was quarantined or home, take care of the family member who got contracted with COVID, you're eligible to request the paid sick and family leave credit for up to 2 weeks if you paid any amount of wages to that employee. So this is something which many people are not aware of, and this is still available. And what else? Well, there is still more options available. Employer portion of Social Security tax. You can defer the payroll taxes, which I don't really recommend unless it's extremely a must and your business cannot survive. I do not recommend that. But there are other 7A, 504, and microloans available. State loans and grants are available, as well as local loans and grants available, private grants available. And banks and other financial institutions are also providing other grants as well as loans. There are many non-bank lenders who are coming up with the funding as well. And the most important, 100% of meals deduction. So that is something available as well. Just make sure that you maintain the receipts and write down the purpose of the related to the business for that meal deduction. But this is going to be one of the very, abused or tax strategy that many businesses will not realize this, and they will just spend money on the meals, not realizing what kind of a documentation is required. Only keeping meals receipts are not helpful, not at all. You are opening up the door for the audit. Make sure that you are properly documenting it and properly accounting it. Additional support, which is available in terms of cash flow analysis, runway analysis, cash management, estimated tax payments, forecasting, budgeting, debt restructuring, and determination of future funding needs, and Biden's tax planning, which we are planning to cover in our next webinar. About going in detail about Biden's tax plan. Let me just go and launch another polling question. Did you receive any state grant? In response to this COVID pandemic, there are many states, many counties who issued the grants. I have a client in Maryland who received at least 3 rounds of county and state grant, $20,000 each. We have clients in California who received the grant as well, the Texas, Arkansas, Pennsylvania. So many of our clients received the grants from their state, including Florida. Yeah. Biggest problems in getting these loans is getting a bank or an institution that's actually funding, calculating maximum amount you can or you need to borrow, getting documents together so there's no back and forth, getting documentation for loan applications together fast, and getting supporting documentation together fast, getting your spot in line. And banks won't answer and they are not going to be responsive. And that's why it's important that you prepare meticulously proper applications. And many banks have conflicting advice and conflicting guidelines. Again, bankers are not the accountants or not the attorney. So they have lots of conflicting advices. Moving on. So I'm going to skip some of this. Not to mention there are many state and local loans and grants available. And we find more every day. My team tries to stay up to date depending on the state of our client. So whatever state we have clients in, my team makes sure that we stay up to date with the different grants that are available. And we are staying on top of this evolving loan features, qualifications, and requirements. And I'm going to skip some of the slides. There are a whole bunch of services that we provide. I don't want to spend too much of time on this. If you are someone who needs any help, I'm going to share some information. You can schedule up a time to go over with that. But I'm not going to spend too much of time on that. The one final thing I want to make sure that it's very, very important that you strategize on how to put it all together. Because taking one strategy could block you from the future opportunities. So it's very, very important to strategize around this. Strategies going forward, understand the rules, apply for everything you might receive, Don't necessarily wait for number one before you do the number two thing when it comes to the loan applications. When in doubt, just fill it out. And if it turns out that you were not eligible and you got it by mistake, you can return it. It's not a big deal. You can't get what you don't ask for, right? Next step, if you are someone who needs help with any of the applications or any questions, just like last time, especially for the attendees of this webinar, we have set out some hours for the speed session, and it is only available for this for the attendees of this webinar. Tarun, if you can make sure to put the link to the questionnaire, you just have to make sure that you complete that whole questionnaire and form, which will give us a little bit of an idea about the speech session. Those speech sessions are like about 15-20 minutes, just to help you answer any of the questions that you have, and to review your eligibility and get your action plan ready. And I think that's it. So I'm going to close this polling session, and let's show everyone result. Only 32% of the attendees have received some sort of a grant. There are more than 68% of the business owners who did not receive any grant. And I'm glad that we have 0% who said, does it even exist? I don't know about it. So that's kind of pretty neat. Okay, so what I'm going to do, I'm going to go over the Q&A questions, and let's cover that. So Courtney is asking, I undercalculated with the first round, and with this second round, I'm really hoping to push very high. If I overcalculate, does that mean I will not be approved? My thought is that if I do not get fully forgiven, then that is fine. I will pay back whatever amount that I'm not forgiven, but I just want to make sure I get approved. In fact, Courtney, I would say under calculation will be okay. Worst case scenario, you will receive less money. Going with the over calculation, if your supporting documents are not matching up with your loan, it will confuse the bank as well as to the SBA. So it will not get even processed anywhere, and it will not even make in the pipeline. So, and you may miss out the whole PPP loan money completely altogether. So I would say, of course, we want to get the maximum, but if you go something very aggressive and you over calculate, which means you are delaying your spot in the pipeline and hence delaying your spot getting any money at all. The next question I have from Amit Patel. I have applied for PPP2 and we released our motel last year in Feb. However, due to COVID, we did not open until May 2020. When things opened, we have no income or payroll until after May 2020. Do you think we can still get PPP2? Bank I talked to said we have to have payroll interns to get qualified for the loan. We did receive EIDL of $56,000. Please advise. So it looks like that you leased a motel in February, which means this was an existing motel, right? And if it was an existing motel, you are absolutely eligible for the PPP2 as well as PPP1 if you never received any PPP1 loan or the prior owner never received any PPP1 loan. Banks are giving you conflicting advice. You know, I'm going to go back again. Banks are not accountants or banks are not attorneys, and they cannot keep up with all of this ever-changing law. So bank does not know, but we have helped many business owners who just bought a hotel. They got the PPP loan approved. They also got the EIDL loan approved. Now, if you received the EIDL loan, which means you should have got the PPP loan as well. I don't remember if you were there in our last meeting. We had Gaurang Patel. In his case, he built a completely new hotel. And he opened it in October 2019. He built it from scratch, opened in October. I think his LLC was created in October 2019, but his business revenue, I don't remember it very well. properly on the timeline, but he was approved for full $150,000 of EIDL loan. At the same time, he did get the PPP loan as well. So I'm very confident that you will receive it. Reach out to one of my team member and we can guide you on that. Courtney, I can amend PPP1 loan for the undercalculated amount. I was already approved for PPP1, but can I ask for the amount that I undercalculated? Absolutely yes. If you calculated lesser amount by mistake and you feel that you are eligible for the higher amount, you are absolutely eligible to get the higher amount. Next question Courtney has is, anyone being denied for asking for too high of a loan, over calculating? Yes. If you request for too high of a loan or for over calculating, two things would happen. Number one, first of all, if bank cannot verify all the information, your loan will not go forward at all. It will get stuck in the pipeline. Number two, if by mistake bank approve, lets it go forward, and then SB also overlooks it and lets it move forward, and you receive the loan, you could have fraud inquiries. Okay, so I would definitely be careful about that, because these things have happened. I don't know if you have seen it in the news, but there has been cases, that after the fact, SBA found out, they traced it back and they got all the money back. So this will be considered as a fraud on the loan. And even if you're doing it with the good intention to get the maximum, but it could cause some red flags. Anonymous.
Can I add something here?
Yes, Taruna.
So PPP amount, the eligible loan money is calculated using or applying the SBA loan guidance. And when we calculate that amount, we include all the items that are eligible to be included as part of PPP loan calculation. And many times bank does not understand, how this amount is calculated. Is it right? Is it wrong? That's when they come to us asking for the clarification. We show them all the guidance that we have from SBA and how we calculated our amount. And we receive that kind of question only when our calculation comes up higher than what bank calculates. And that's when we have some differences. But once we provide them guidance, the support documents, they will honor our request. So just so that you know, no matter how you calculate your applications, bank does their own calculation too.
Yeah, that was a very good add, Taruna. The next anonymous attendee, do you have to be approved for PPP1 loan forgiveness before you can apply for PPP2? Not really. As long as you have used your first round of PPP loan money, you are absolutely fine applying for the second round of PPP loan. Another question from Courtney, how do I amend PPP loan amount if it has already been accepted and fully forgiven? Is it even possible to get the PPP1 amount amended to include the miscalculated money? If your loan was fully forgiven, then it's kind of a little bit challenging, because then bank would say, it's already forgiven and its final decision is on the bank. They might agree or they might not agree. So I would be kind of, I would say that is completely bank's decision. Hey, Chirag, nice to see you on the webinar. This question is from Chirag Patel. We received $150,000 from EIDL, but never received $10,000 advance. When we called SBA, they said to wait for the program to reopen. Any suggestions? Yes, you are correct, Chirag. Whatever response you got from the SBA is not wrong. So SBA has been so busy with the PPP loan applications and the forgiveness application and stuff like that. The EIDL advance and the EIDL loan got a little bit overlooked and delayed because of that. So we did receive a guidance from the SBA that SBA is going to be sending the emails. Whoever is eligible for the higher amount, or when you applied for the loan and you had checked that box for the $10,000 advance, then you will receive the email. If you, when you applied for the loan and you did not check that box, then you will not receive any communication and you are ultimately not eligible to receive the advance money. So as long as you had checked that box, whether you received $1,000, $2,000, or you did not receive at all, you should hear back from the SBA. Have next question from Sam. Did you get any clarification about SBA making mortgage payments of interest and principal like they did in 2020 for SBA loan borrowers? Yes, I did hear on that. SBA is doing for 504 and a 7A loan. And I have to go back and refresh how many months it is.
Come here.
You know it, Taruna? Taruna, do you know it?
No, I was trying to, but that was something else, not related to this one. So
Okay.
you can go ahead.
Yeah, so I think it is somewhere from 3 to 6 months, if I remember it correct. But feel free to send me an email and I'll look it up and let you know. I don't want to give you wrong information here. So next question is from Pratik Shah. For existing business purchased in July 2020, if the prior owner received PPP, are the new owners eligible for round 1 or just round 2? So if the prior owner received the first round of PPP, you're only eligible for the second round because you were not in business that time. So you can't get the first round of PPP. Another question from anonymous attendee. If I did not receive an EIDL loan from last year, am I eligible to apply now? Absolutely, yes. Yeah, you're eligible. So, but I would need a little bit more clarification. What do you mean by did not receive? Did you apply and not received, or you never applied it? But either of the case, you're eligible.
Or whether if the business was in existence last year.
No, that's not the question.
It depends on that. When
Yeah.
it came in operation.
So it depends on when your business was in operation at the same time. So there are 2 different ways of applying. If you already applied in the first round, never received the money, you cannot go back on the SBA portal and reapply. Because if you do the reapplication, within next 2 to 3 days, SBA's automated system will send you, okay, you have a duplicate application and your loan is automatically denied. But if you have never applied it, then you can apply it now. Now, if you applied it before and you never got funded, what it means, you have to go for the EIDL reconsideration process, which is very, very involved. So I think I covered all the questions from Q&A section and going to go over the questions in the chat box. I think most of the questions
is the last one that you want to address from Atul Brahmabad.
Okay, how are you, Mr. Atul? I do remember meeting with you a few months ago. I'm sorry to hear that you have still not received your EIDL money. And I think we have spoken sometime in June, July, and even after that. So you applied earlier for EIDL, which was denied earlier. We have requested to reopen and reconsider, which they allowed. And they're asking same documents again and again. And can we apply as new application? Unfortunately, you cannot apply again for the new application for the same reason. The way SBA system is, it will automatically flag your new application as a duplicate and automatically deny it. So it's not something that SBA system will allow. And even if you cancel your first application, you still cannot apply for the second application because the system still remembers that you applied it initially. So when you apply second time, it will not even make it to the loan officer. System will flag it automatically. Now, it has been a notorious problem that SBA keeps asking for the same documents again and again, which my team has noticed it as well. And there could be a couple of reasons behind it. Either there is something wrong in the document, or SBA is looking for some particular information or some particular version of the form, which you are not submitting them. And that could be the possibility. Now, what happens sometimes when a loan officer is working on your application, they are looking for some specific information. everyone has their own way of working, right? So they're looking for some specific information. And today that person will say, okay, I need this information. And if you take a couple of days in sending that information, by the time you send that information, you will have completely other person assigned to you. That time that person will look at it, but that person wants completely different information. So it could go into spiral and spirals. It's very important to make sure that you have the correct documentation that is required. What is the best way to contact you or someone in your office to get further assistance? Turna, can you post the link in the chat box? I have this person asking here the question. So the best way would be, Turna has posted the link to the questionnaire. Fill out the questionnaire, and at the end of the questionnaire, you will have, a link to schedule up a meeting, and we can help you to schedule up a meeting from there. I see that Hector Morales is raising hand, but I don't know. Do you have any question, or you're just letting us know you are here, Hector? If you have a question, to make sure that you post it in the Q&A or chat section. I know you met with one of my team member, Justin, a couple of days ago. So we can definitely help you if you have any questions. Alrighty. Sorry, everyone. We have ran a little bit longer than our allowed time.
I have one more question here.
Who is it?
It says anonymous. So the question is, I think I was supposed to receive 3.5 times for PPP2 loan. However, my bank is saying me that I can only receive 2.5 times, and I do own a hotel.
Oh, okay. So here it is. Your bank is saying that you are eligible for 2.5 times. There could be a couple reasons. One of that reason could be either bank is not aware of the regulation, or number two, that when your entity was registered and when the way your taxes are prepared, your NSICS code is not recorded correctly. The wording on this new stimulus bills are such that any business with 7.2, any NSICS code starting with 7.2 is eligible to receive the 3.5 times of their average payroll cost as a PPP loan. So if you have any other NSICS code other than the 7.2, you get the PPP loan at 2.5 times your payroll.
That reminds me of one case where we were helping our client for EIDL reconsideration. And in that event, what happened was that person also owned a hotel, and he had an accountant preparing the tax return for maybe like past 4 to 5 years. Company was registered as it should be. But when you look at the tax return, the way it was prepared as if it was a rental property. And this owner was renting out its property and was receiving a rental income. And as we kept denying, saying your business information doesn't match to what's in our system. That could be the reason, even if you have a hotel and if it's reported as a rental activity, your NAIC code will be wrong and you will not be eligible for 3.5 times unless you amend all those prior tax returns.
Yeah, it's a bigger issue than what you could think of. That small NSICS 5-digit code is a bigger issue than what you can imagine. Send us an email or something. I would definitely like to do some research why you are, getting this response from the bank. I'm very curious on that. So the last question I'm going to cover here from Shanna, I hope I'm pronouncing your last name correct. I know we were in a strategy session a few minutes ago before the webinar. So he started his business in March 2019 and only got the EIDL and one PPP in 2020, and one PPP loan. In 2020, his income went up, not down. I started my business in March 2019. I only got the first PPP in 2020. My income went up, not down. Am I still able to get the PPP the second time? As long as there is a drop in revenue when you compare 2019 versus 2020, quarter over quarter comparison, As long as you have at least one quarter where there is a drop in revenue, you are eligible for the PPP loan. If you don't have any drop at all in any of the quarters, then you're not eligible for another PPP loan. However, depending on your revenue for 2019 and 2020, you could be eligible for the higher amount of EIDL loan. So you need to look at both. But either case, you should be eligible for other state and county grants that are available through your state. Alrighty, everyone, I have to get going. Thank you, everyone, for your time today. For our next webinar, we will announce the date in the next few days. We are kind of working on coming up with something a little bit different. And so we will announce it in next few days, and keep an eye on it. We are trying to increase the level of value we bring in our webinars. And hence we have decided that moving on, we will be charging a very nominal fees for people to come in and account for our time and efforts that we are putting in. A lot of things goes behind these webinars. And I must give special thank you to Taruna as well as Justin, who has helped me tremendously to make this happen. So I really appreciate Justin and Taruna, and thank you everyone for joining us today. And I look forward to seeing you on our next webinar. Bye.
Bye, everyone.